Are we going to see interest rates fall this summer? That's a big question that people have been asking me. And the reason people have been thinking this right now is for two main reasons. First of all, this last week, we've seen some of the major banks, including HSBC, Barclays and Natwest, slightly reduce the interest rates they're charging borrowers on mortgages. And also, there was a bit of a change of sentiment at the Bank of England Monetary Policy Committee meeting in June, where people are talking about the possibility of interest rates coming down in the summer. Now, at the last meeting, the policy committee voted to keep the Bank of England base rate at 5.25%. This was despite inflation coming down to their target of 2%, because they said, well, we need to see inflation is staying down before we bring the rate down. Now, I wasn't sure if we might see an interest rate fall before the general election. That would have been very good for the Conservatives, obviously. I'm not sure if the Bank of England are completely apolitical or if they sit on one side of the political fence. Who knows? But obviously that didn't happen. But the strong feeling of many people is that we might see rates come down on the 1st of August, which is when the Monetary Policy Committee of the Bank of England have their next decision. Now, this is going to be very welcome for many people because rates are still relatively high. We're not going to see a big decrease in rates, but there's a possibility there might be some, which will be very well received by everyone who's on a variable rate. People have two types of mortgage. Often they're a fixed rate, where for a period of time they're paying the same amount, or they have a variable rate. Normally you go onto a variable rate at the end of a fixed period. And what's happened over the last decade, where the Bank of England base rate was very, very low, 0.5%, many people just stayed on variable rate mortgages because they were paying Bank of England base rate plus maybe 2%. So the effective pay rate on the mortgage is maybe 2 to 3%, which is very, very low compared to previous years. However, when interest rates started to go up, at the beginning of 2022 and through into 2023, and the Bank of England base rate actually got up to the 5.25% it's at currently at the time of recording this video. That means you've had millions of people who've come off their fixed rate mortgages and suddenly their mortgages have been 2, 3, even 4 times more than they were paying previously when they were on a lower fixed rate. So this means there are lots of homeowners who suddenly are paying far more on their mortgage. Now, if people can afford to do that, well, fine. But a lot of people got used to paying very low rates on their mortgages. So I expect we're going to see a lot more people who unfortunately cannot afford to keep up with their mortgage payments and might well get repossessed. Now, I think the government and the Bank of England are very conscious of this, and I think generally lenders have been warned to be more sympathetic to people who are struggling to pay their mortgages. So I think that's going to take longer for repossessions to happen, but I think there will be some people who ultimately cannot afford to pay their home mortgage. And for property investors, I know investors who have got properties where the interest they're paying every single month on that mortgage is more than the rental income coming in on that property. So that means they are losing money. They're in a negative cash flow situation. Add that to the fact that if they own that property in their own name and they have a mortgage and they're a higher rate taxpayer, they're also going to be affected by Section 24. Now, Section 24, as you know, was the ruling brought in by George Osborne, suggested in 2015, came into practice in 2017, whereas as property investors, if you own property in your own name, which always used to be the best way to own property, and if you have a mortgage, which the vast majority of investors do have, and if you're a higher rate taxpayer, which not all but many property investors are, it meant you're going to pay a lot more tax on that property. Now, they've changed the way we're taxed under Section 24, such that you can have a property that is making no cash flow. When you take the rent, take off the mortgage and the other costs, it might be making no money or even losing money every month, but on paper, it's making a profit. And that's because you can't offset all of that interest cost anymore. So just imagine this. You've got landlords who are losing money every single month on their property. And then at the end of the tax year, HMRC is going to say, well, actually, you owe us money tax on that property. Now you can see why many, many landlords have been looking to sell their properties and have been selling their properties over the last few years. Section 24 came into action in 2017, was phased over 4 years. And many people didn't really notice it. It kind of came in gradually. They didn't notice it because the interest rates were so low, but now the interest rates are much higher. There's this double whammy effect. And I think that's why we can see many landlords thinking, you know what, maybe I should sell up some of my properties and benefit from the incredible capital growth I've had over the last 10 or 12 years or so. However, things might be about to change. As you know, the general election is coming. There's a lot of uncertainty. I still don't know who I'm going to vote for. My last video was a review of the different manifestos from the main three parties, who in my mind are probably Labour, who are probably going to win, Conservatives, who were the past government, who I think maybe because some of the things they introduced, they probably lost a lot of the traditional votes they would get. I would have normally voted for Conservative, but I'm just not sure because I don't think they've been very friendly or towards entrepreneurs and property investors. And then you have the new contenders on the block, the Reform Party. Obviously, a lot of people don't like Reform, and there are some good reasons why that's the case. But interestingly, Reform said that they would turn around the ruling about Section 24. In fact, they said they would abolish Section 24. So that will be very interesting. Now, I don't think they're going to get to power, but you know, there are a lot of people who are very disillusioned with the Conservatives who I think might well vote for Reform. So it's going to be a very interesting general election. I highly recommend, maybe the team can queue up that video as the next video to watch after this one if you haven't watched it, but I highly recommend you watch that to get up to date with what's going on. So what does this mean for us as property investors? Well, there's all sorts of other things that the political parties are talking about they're going to bring in within 100 days of being in power. And rather than worry about that, I think we need to see it as an opportunity, because most property investors will be sitting by the sides waiting to see what happens. But I can absolutely guarantee you right now, there are lots of people who are panicking who need to sell properties. And even once a new political party is elected and get into power, I think it's going to be at least 6 months before we see really what's going to happen. They'll bring some things in quickly, but we're not really going to know the impact of that probably for a good 6 months. So this uncertainty is going to continue probably for all of 2024, which means there's an incredible opportunity for you to get out there and snap up some incredible deals. I know many of my students did very well just before the Brexit referendum, particularly in London, where a lot of people were very nervous about Brexit, and people picked up properties for huge discounts, even in prime London locations, as much as 21% discount because they were motivated sellers. And if you're looking for good property deals, that's always the secret. You want to find the true motivated sellers, people who've got a problem, and we want to find an ethical win-win solution to help solve their problem. And if you help someone solve their problem, if you give them what they want, they're far more likely to give you what you want. So whilst everyone else is standing at the side waiting, I think the next 6 months are going to be an incredible time to get some great property deals. Now, is there uncertainty about what might happen about interest rates? Yes, I think we're going to see interest rates come down, so the situation is going to get better. Is there uncertainty against political decisions, things that might happen? Yes, we don't know what's going to happen if the Conservatives get back in or if Labour come back in. They're talking about certain things they might do, might not do. But at the end of the day, you need to remember that there is not enough accommodation in the UK. Both the Conservatives and Labour have said they're going to build like 1.5 million homes. Labour say, Conservatives say they're going to build 1.6 million homes during the parliamentary term over the next 5 years. That's because we just do not have enough accommodation. And that's a fundamental fact that is not going to change. And if Labour come in and bring in lots of policies that put lots of landlords off, that's actually going to cause an even worse housing problem, because unfortunately, or maybe fortunately, depending how you look at it, many landlords will decide to sell up, get rid of their properties. There'll be less landlords renting, and rents will actually go up for the remaining landlords who are here. Now, Labour have talked about rent caps and things. How realistic is it to impose those? They can't take rents back. So we're going to have to wait and see what happens. But as I said, while other people are waiting, sitting on the sidelines, now is such a time for you to get out and investing. I think, and it's a bit of a guess, but I think rates will probably come down to more like a 4.5% is what we'll probably see the Bank of England base rate to. I don't think we'll ever get back to Bank of England base rate at 0.5%, but who knows? We don't know what's going to happen in the future, but I think working out on a 4.5% is probably a realistic calculation. Interestingly, I've been teaching people how to invest for the last 21 years, and all of that time, we've always used 6% as a calculation, 6% per annum. We said that's how much your mortgage is going to cost you. Now, for the last decade, it meant people were making more money than they thought because obviously they could get mortgages less than 6%. But all of my students who followed our advice, when the interest rates went up, they were still making money on their properties. The people who are stacking their deals on a 3% interest rate, they're the people who had problems. They've had difficulty because obviously interest rates might be twice that. They are now losing money on those properties, unfortunately. So when you're listening to someone and learning about property investing, I would ask yourself the question, how long has this person been investing in property themselves? And how long have they been teaching property? You see, one of the problems with a lot of people out there teaching, and it's great to have lots of people teaching, it's good for the market, it's good to have competition, that keeps standards high. The problem is there are a lot of people who are teaching property investing who haven't been investing that long themselves, and they certainly haven't been teaching people very long, so they don't have the breadth of experience, they don't have the depth of knowledge, and they don't have the track record to understand what happens in different market conditions. So having started investing in 1995 myself and becoming a landlord, renting out to other people in 1998, I've had a long track record of renting properties when the market's been going up, crashing down, recovering, going up again, and correcting down again. So I know exactly what you need to do depending on what's happening in the property market. And I think it's important you understand that you can't always have the same strategy. If you've been successful investing for the last few years in a rising market, that doesn't mean what you've been doing in the past should be what you should be doing right now in the market that's at best shaky. In some areas, it's still going down. Some areas it's stabilized. Some areas, property prices are going up. On average, I think we're going to see property prices stagnating for the rest of the year around the country until we have a bit more stability politically and we know exactly what's going on in the future of the country in terms of political guidance. So who knows what's going to happen? I recommend you take the opportunity to get out there and find some great deals. The news about interest rates starting to come down with some of the major banks, I think, is a really good signal. It's a good indicator that a lot of people believe that rates might come down in the summer on the 1st of August when we get the next announcement. And I will be doing a video that day to give the latest update on exactly what's happened when the Bank of England make that statement. Are they going to leave the rates the same? Are rates going to go up? Very unlikely. Or are they going to come down? Which is probably the outcome that they're going to go to. I just wonder how much rates are going to come down by. I don't think it will be a huge discount. I think it will be a small discount and maybe a steady decline in interest rates over the next 6 to 12 months. But we have to wait and see. I do hope this video has been useful. If you liked it, please do like it. Come and comment below. What do you think is going to happen to interest rates? And subscribe to the channel and make sure you hit the bell icon to make sure you're notified anytime we bring up a new video like this, which is normally about twice a week. As ever, I encourage you to invest with knowledge, invest with skill, and enjoy the next video. Hello, it's Simon Zutshi here. I do hope you just enjoyed that YouTube video. And you know what? If you really want to move forward in your property investing, it's much easier to do it with the help of other people. And one of the best things you can do is go to your local property investor network meeting where you can meet other like-minded people. You can learn some of the very best strategies and really get a motivational positive boost every single month about what you could achieve from your property investing. Now, there are 50 plus meetings around the UK. We've got meetings in the Netherlands, we've got them in the UAE as well, and growing around Europe. So all you have to do is click on the link below this video, go to pinmeeting.co.uk. All the meetings are listed there. Click on the one that's closer to you. See when the date and time is. And if you want to attend that meeting, you can just buy a ticket. Or if you want to come as my guest to your very first PIN meeting, just use the voucher code, which is the word YouTube, because obviously you've watched the YouTube video. So just go to pinmeeting.co.uk, pick your location, scroll down where it says payment options, click on pay with a voucher code, fill in the details, use the word YouTube and it will bypass the payment page and you can come to your very first PIN meeting for free. If you haven't been yet, I highly recommend you come along and see exactly what you've been missing out on. You're going to wish you would have gone years ago. It's going to help you move forward massively with your property investing. So if you enjoy these videos, I highly recommend you go and check out the PIN meeting. Click on the link below in the description.